Whether it's the fact that Bitcoin's down 50% in the last 6 months or XRP's down 55%, it's very misleading when you think about what's actually being adopted and happening in the background.
There are typically 3 wealth transfers in everyone's life. So in someone's lifespan, there's typically 3 wealth transfers. And usually it's a new technological advancement, and there's 2 of those in your lifetime, or there is a monetary advancement. And this is all of that in one, which is very, very interesting.
If it's your house, it's your house. And honestly, once the trust is there, once the transparency is there, the rails are there, it'll become common. So our kids, their kids, will be using these and it'll be normal. They'll make jokes about us carrying around trash in our pocket and paying people with it. You know, they're like, you carried paper?
Kaelin is a crypto investor, consultant, and co-founder of Digital Asset Sisters, a community focused on expanding access to digital asset investing, outperforming traditional market strategies. She works directly with individuals and businesses seeking structured entry into cryptocurrency markets. A wealth of knowledge. Thank you for joining. I think you flew in from Miami. So again, hopefully, why didn't you bring the sun with you?
I was trying to bring the sun, but it didn't follow me.
Oh. Well, at least your dad did. So he's here somewhere. Let's also bring up onto stage here Erin Friez, Chief Operating Officer of Digital Ascension Group. Erin serves as COO of Digital Ascension Group and Chairman of the Board at Digital Wealth Partners, where she helps build institutional-grade crypto wealth management infrastructure for family offices and high-net-worth investors. And this is where things get really interesting. With more than 15 years operating at the intersection of law, finance, and digital assets, Erin co-founded Digital Asset Research, DAR for short, developing methodologies to identify and filter wash trading and market manipulation in crypto markets. That framework was later referenced by regulators, including the NYDFS in virtual currency listing guidance. As well, she led DAR's strategic partnership with Bloomberg, Chainlink, and the FTC Russell, which is a subsidiary of the London Stock Exchange. She is integrating reliable crypto data into traditional financial markets. Erin has structured tokenized fixed income products, designed compliance frameworks, and developed risk models that satisfy bank examiners, bringing regulatory-grade discipline to digital asset wealth management. Interesting. Let's also bring the moderator up onto stage here, Abs Nassif. Where are you at, Abs? Oh, Abs. Abs Nassif is the founder of Good Evening Crypto and so much more. A leading voice within the XRP ecosystem, he previously played a central role at 3T Warrior Academy and was the on-air face of the Good Morning Crypto Show before launching his very own independent platform. So kudos to you, Abs. Through Good Evening Crypto, Abs conducts in-depth research, interviews blockchain founders and project leaders, and provides detailed market breakdowns focused on XRP ledger developments and broader Web3 trends. You're at the epicenter of everything that's going on, and you're doing great research. So please take notice to what Abs is up to. Also up onto the stage is Stone. Stone is, let me find you, Stone, here. Oh my goodness, Stone, I'm gonna do this off the cuff here, sir, because my fat fingers won't find it fast enough. Stone is also a veteran as well, who was a mechanic on aircraft carriers for a few years before stepping off.
All right. Hi, I'm Stone_XRPL. I did 20 years active duty Air Force as a jet engine mechanic. The latter part of the career in leadership positions, process improvement, troubleshooting, and quality assurance. When I retired in 2017, I got hired on at Bosch for as a setup mechanic, turning machines, making little widgets into other little widgets. When I transferred that department over to Brazil, or enabled that, I was given a process improvement job working directly with engineers, making the things they were already making quicker and better and cheaper so they made more money. After not being fulfilled from that, I decided to quit all of it, and I started my own consulting business, and I help I help humans turn their dreams into blockchain businesses.
Into blockchain realities. But more importantly, he's also just a great community builder. Stone hosts regular virtual X Spaces where you guys do everything from sharing wealth of knowledge in the XRP ecosystem to karaoke, but more importantly, it's just the community and engagement that you're bringing together. So again, you're at the heart of this community, and thank you so much for your service and your efforts within the XRPL. I'm going to hand the mic back over to you, Abs, as moderator. Thank you.
Thank you very much. I just want to test this out, make sure this one's, can I switch that mic actually? Testing. They're all okay, I guess. Well, we're going to talk about a lot of exciting things. I'm pretty loud, guys. Testing. Let's go. Give me all 3 mics. Oh. Gotcha. Yep. I got this one. This is now cemented into my hand, sir. Sorry about that. So now that we got the awkwardness out of the way, we're going to talk a lot about a lot of exciting things. Now, I know a lot of people, when they think about Web3, they think about price appreciation. So I wanted to spend some time talking about other things besides price appreciation in the crypto space. And we're going to address the Clarity Act as well. If you guys didn't get to catch my show this morning, which 99% of you didn't, Brad Garlinghouse had some really exciting updates. He thinks 90% chance we get the Clarity Act signed into law. That would be the game changer, and I think that's what we're going to break down for the first portion of today's show. I also wanted to make sure I give a shout out to Stone, because I have a question for you specifically at the end, so I'm looking forward to it. But just to kind of kick it off, when people think about Web3, a lot of people think about price appreciation, right? And I think that can be one of the most misleading indicators in the entire crypto space. Whether it's the fact that Bitcoin's down 50% in the last 6 months, or XRP's down 55%, it's very misleading when you think about what's actually being adopted and happening in the background. So Erin, I'd love to start with you and just think, when you think about what Web3 is outside of price appreciation, what are some of the opportunities that people have to really build wealth?
Yeah, absolutely. And as somebody, sitting in a wealth manager right now, this is incredibly important to me. 2 things I'm going to say about this. I think, first of all, utility to me. I know Nathan talked about this a lot in the last panel, right? Actual adoption of this technology is what's really important. And so when I think about, what I'm looking at actual utility. Where are the blockchains that are actually solving real world problems? And not only solving them, who's adopting them? Is anybody actually using the technology to solve these real world problems? And I think when you actually look at the intersection of that, that's where that is going to come from. The second thing I'm going to say, just as somebody sitting in a crypto wealth manager, is actual integration of this asset class into your entire portfolio, right? When I think about building wealth inside of Web3 and inside of crypto, it's part of a broader portfolio, right? It's time to bring that actually in, to bring this into financial planning, to understand what this means from a broader scope of what you're doing. Actual holistic wealth management inside of this asset class, to me, is what's really missing. Crypto's always been upside down, right? It's retail driven, right? It's not institution down, it's retail up. And so I think that the next big unlock for wealth in Web3 is going to be when all financial advisors are able to access this asset class, be able to advise their clients on how to allocate to this asset class and what that means, and how to build it into a portfolio.
Quick follow-up question. So why does XRP stand out from the rest of the assets in the space when you think about the utility in the Web3 development?
Yeah, for a number of reasons, right? The way I think that we've talked about already today, and I'm sure everybody in this room knows, it's built from a regulatory first view. I think of a couple of things, like when we're talking about tokenization, for instance. It has to be regulatory compliant, right? That's something that you have to keep in mind. XRP is uniquely designed to build that actually into the asset itself. You have to do that. It's also, again, utility, right? It's done the right things to be integrated into the right systems that are going to drive the future of finance. And so I think those 2 things combined are what makes it stand out.
It's definitely an exciting time, too, when you think about what the prices are versus what the opportunity is. Like, I think even 12 months ago or 15 months ago at this point, before the election of Donald Trump, people like us really didn't have that much certainty about what the future would look like. And so now we're only a few months away, from my opinion, of getting the Clarity Act signed into law following the Genius Act. And this is kind of a twofold question for both of you. But where do you think this market is after the Clarity Act is signed? And what will that do for the Web3 use cases that Erin just discussed? We can start with either one of you.
Yes.
It'll turn.
I'm green. Okay. All right, I'm red. Okay, perfect. Red's the good one. Red's the go. Yeah, well, with the Clarity Act and with what you just talked about, I really want to touch on specifically that there are typically 3 wealth transfers in everyone's life. So in someone's lifespan, there's typically 3 wealth transfers. And usually it's a new technological advancement, and there's 2 of those in your lifetime, or there is a monetary advancement. And this is all of that in one, which is very, very interesting. So I think that touching on Web3 and that it's not just about price appreciation, I really like to think of it as you're grandfathered in. You guys are all sitting here. I'm assuming most of you guys are invested in XRP, some other cryptocurrencies. You guys are grandfathered in, and that means that you're not just getting price appreciation. I mean, the goal isn't to, okay, it hits $100, it hits $1,000, oh, now I sell it all. No, the goal is to hold it and use all of those applications on Web3. Use the utility. And so I really think when I think of Web3, I think of all of the little things that I'm actually going to be benefiting from just from holding the asset itself. So in my perspective, it's not, okay, what is the price? When am I going to sell? It's, okay, how can I grandfather myself in and gain as much as I can now so that I can use all of the utility from Web3 in the future?
And just building on that a little bit, I think one of the things that I've come to realize about Web3 in particular is that a lot of people get in with this understanding of, all right, I'm here to make money. And so maybe that's the wrong way to look at the space. And I think, Stone, maybe you could address this, because one of the questions that I had prepped for to ask you is, what would you say to somebody who's just getting into this space and they're solely focused on some of this price appreciation? I think a lot of the things that she addressed with the signing of the Clarity Act, it's going to unlock all these ways for people to earn an income on the assets that they own. And Brad Garlinghouse had a great statement earlier today where he talked about the acquisition of G Treasury. And he's like, they do $13 trillion worth of payments annually. 0 are done on blockchain right now. And so as these companies start migrating a lot of that liquidity on chain, well, that on-chain liquidity, it's not here and gone today and tomorrow. It's there for years to come. And I think that people like ourselves are also going to begin parking that liquidity on chain, whether it's through yield-bearing products like a Flare or whatever example that you'd like to use. But I feel like you'd be a good person to address this. What would you say to somebody who doesn't have that understanding?
Well, first of all, I appreciate Ray and Juan inviting me in for these conversations. And for those of you that want to hear about my views on price, I don't care. I don't look at price. My value in this whole space is the human concept, right? It was touched on earlier, trust and transparency, human relations, and our ability to trust in all the rails that are being created. Shout out to Nathan. I cannot wait to get to know you better. To answer your question, the trust and transparency is what's going to come with all this legislation. And that's what Brad is really focused on. He doesn't agree with half the things that are written in there, and he's been pretty vocal about that. But the point of the trust and transparency coming to the masses that they can believe in something. And that's what I work on when people come to me for my consulting. They come to me with, how can I get rich? And I said, well, if that's your goal, you're going to get rich, and then you will be in here 4 years later, and you're going to ask how to do it again. So what you need to work on is how can you use your wealth how can you have your wealth create an income for you, and then you grow your network and you grow your self-worth to a point that your network it becomes your net worth. Sorry, I've messed that a little bit.
No, that was great.
Off, but yeah.
A lot of times when you talk to wealthier people, they always say once you get to a certain point and you can park $2 million worth of capital and you're earning a certain percentage and you're generating that $50,000, $60,000, $80,000 a year. I think that's where all of us would like to get to at some point. And congratulations to the people in this room who are there. I'm not. But what I would say on a more serious note is, what could we think of when it comes to the XRP yield opportunities, Erin? Because I know a lot of people out there are waiting for the day when I can take my XRP, I can park it, and I can know not only is it earning income, but it's safe. Can you speak to that a little bit?
Sure. So I mean, I know there are XRP yield possibilities coming, with the DeFi opportunities that are native to XRPL. But there's also yield opportunities today. So I can speak directly to what it is that we do at Digital Ascension Group and Digital Wealth Partners. We actually have yield opportunities on or income opportunities on XRP today, where we take that native asset, we're able to lock it in qualified custody. We take margin against those assets, and then we are able to go deploy them in order to earn income and to earn returns on that. So there are ways to do that today, and I know that that there are more coming. There are also ways to earn, yield on those. There are no native yield opportunities on XRP right now. That is a limitation, right? And one of the challenges that we've had is that we have a lot of clients that are heavy in this asset class, and they don't want to sit on it, right?
Yep.
They want ways to earn income on that, and so we've been really challenged to find ways to do that, and we've been able to do that to date in several different ways.
And so do you see regulation coming in changing what you're doing at all whatsoever from a regulatory standpoint? And maybe you could speak to that a little bit, because I think other companies probably feel really similar, where right now it's almost like you're one of a kind and you're kind of in uncharted territories. But as the rules of the road are given to people, well, they're going to take those cars, they're going to drive them on the road. And so maybe you could speak to that a little bit.
Yeah, absolutely. So we are SEC registered. We're fully compliant, registered investment advisor. And so we've had to play by the rules of the road from day one, and we take that fiduciary duty very seriously. What has been challenging is the actual operating model to stay compliant. When it comes to wealth management, the traditional rails are well baked in, right? They've been there for decades, and they're plug and play. You can spin up your own registered investment advisor to trade advise on traditional assets very quickly and easily. It does not exist in crypto, and so we've actually felt like that has been the challenge for us, to find a custodian that will hold the assets in the right way, to find the operating models, even things like billing and trading, in ways that are not commingled funds, right? When you think about an asset manager, they take all of the assets from all of their LPs or all of their investors. They have one pool of money, and they're able to go deploy that and do whatever they want. We as a wealth advisor can't do that. We have to keep everybody's assets segregated in segregated wallets on chain, and then we're able to go deploy those assets, in that compliant way. It has been a lot like, I think Nathan used the word, like figuring out these operating models, crawling through glass. We felt the same way, because we are literally doing a world first, type of thing here with this asset class and wealth management. And we're really proud of what we've accomplished. I hope, I believe we're paving the way for others to do this, but we certainly are leading the way.
It's really exciting. And my best friend, Johnny Crypto, he always says, Abs, it's best to be first, but if you're second, you can look at what the first person got wrong, right? So congratulations to you guys and everything that you're doing. But on a more serious note, I wanted to talk about tokenized assets with you guys as well. And I think, Nathan, for the third reference here, you talked about it prior, where it's like, well, at some point, you're going to be able to have a portion of your house that's tokenized. You can pay that at the coffee shop. And so I think in order for us to get there, which I wouldn't recommend doing, and I'm not going to be doing it, but I think in order for us to get there, we're going to need some definitive guidelines about how to tokenize assets and how to use those tokenized assets. And that's a big portion of the Clarity Act as well. Is there anything you guys would like to reference in that, where you see this going post-Clarity Act?
Well, I was going to go second, but that's fine. I do host a space Monday through Friday on X called Coffee and Crypto with Stone, Lady K, and sometimes Opti. And we actually had a couple of people come on that are actually doing that. I think his name is Chris Gilmore Estates. And the way he's already doing it is he has a parent company that purchases the real world asset, and he owns 51% of it and tokenizes 49% of it. So then we can all own a portion of that. So the next step of that is having the tap to pays and literally being able to pay with a portion of that. If it's your house, it's your house. And honestly, once the trust is there, once the transparency is there, the rails are there, it'll become common. So our kids, their kids will be using these, and it'll be normal. They'll make jokes about us carrying around trash in our pocket and paying people with it. They're like, you carried paper, like. Where? They probably won't even have pockets, right? But anyway, so there are people doing it already, and I think that once America steps up, and like they usually do, leading the way in this industry, it's going to open up the doors for all of us to be able to do that, decentralized. So.
Yeah, I completely agree. And like Nathan said, and we're referencing you, like this panel really loves you. Nathan.
This check?
But like Nathan said, technology really gets implemented when there is trust. And so we're actually in an interesting sector, and we're tapping into an interesting sector right now. And it makes me think of tokenization. But we're actually helping nonprofits right now. We're helping nonprofits receive donations. And I'm just realizing how honestly brutally painful it is to go to these nonprofits and help them and tell them that, look, if you guys receive crypto donations, the average crypto donation is over $1,000 compared to a cash donation, which is $200. So if anyone has nonprofits in the room, we're helping. But I really think that tokenization is going to be key here because people want those tax benefits. They really do. And this is how we got on this track. We were like, okay, our investors, they have long-term vision. We have long-term vision, but yeah, you can skim some cream off the top. And so, but no one wants to pay the crazy taxes that we're paying if you're taking any profit. So the way we got around this was actually being able to, okay, say, let's donate to a nonprofit, right? And if you donate directly with crypto, then you can actually write that off on your taxes and then keep more of the profit. So it's a win-win. The nonprofit gets the money. You get to keep more of your profit there. Now, the thing with this is that I really think that tokenization is going to be key because people are giving in real estate, people are giving in all different types of asset classes, and I think that this is actually going to be huge for the nonprofit sector as well. And when you talk about asset to asset, I mean, we're talking about XRP here. This is an XRP conference. So I think that's really going to be crucial. So the Clarity Act as well is going to allow everyone, and bringing it back full circle, once we get the Clarity Act, I think it's almost more about people finally feeling okay and adopting it. And then the institutions, they already know what they want to do. They want to tokenize. They want to be on the blockchain. They're already set up. I mean, go look at xrpscan.com. You start seeing all these institutions, and I think there's a lot of accounts being created right now. And if you just go look at the numbers, but they already want to do this. They just need clarity, and they need to know they're not going to get slapped on the hand when they get onto blockchain. And I think it's the same thing with people. So you guys are special because you guys are in beforehand, but the same thing with people. They just want to see it before they believe it. And the unique thing about you guys is that you're believing it before you see it.
Well, thank you. I think you made a great point, and we are out of time. But Erin, I wanted to just get one fast question in because you said it, every stock, every bond will eventually be tokenized, right? So when you extrapolate and you look at where we are 5 years from now, maybe let's give some fun conversation to wrap up the show. Where do you think we could be as an industry 5 years from now post-regulation with all these new use cases, all this asset class tokenization? Are we really going to look at a market that could be $50 trillion or $100 trillion? What's your foresight into what you see over the next 4 or 5 years here?
Oh, if I zoom out 4 to 5 years, yeah. I mean, I think if we do have the regulations and the actual operations of this actually, catches up in the way that I think that it could. I don't know about 4 or 5 years, but certainly if you zoom out 10 years, I do think that the blockchain will underpin financial markets, right? Which is going to really disrupt things like clearinghouses and all of the, the back and middle office type of operations. There'll be instantaneous settlement. I think it is going to have a disruption, and then crypto, the crypto market, cap will be the market cap of financial markets, right? It's going to grow exponentially. So I do think that will happen. I don't know 4 to 5 years from now is enough time. Operationally, these things, it's turning, a giant ship to make work. But I think that's coming.
Awesome. Well, that's our time. I want to give a big thank you to Erin, Kaelin, and Nolan for this chat. And thank you to Fuentes, as always.